Welcome to Fida Trade Academy. In the next 30 minutes, you'll learn everything from Trading Complete Trading Course 2026 Basic to Advanced full course for free. If you're serious about becoming a profitable trader in 2026, you're in the right place. Let's get started. If you have always wanted to learn trading but never knew where to start, or if you have been trading for a while but still losing money, this video is going to change everything for you. Today, I am giving you the complete trading education that most people pay thousands of dollars for, absolutely free. I am going to take you from the very basics of what trading actually is, all the way to advanced smart money concepts that professional traders use every single day. By the end of this video, you will understand how markets actually work, how to read any chart in the world, how to find high probability trade setups, how to manage your risk like a professional, and most importantly, how to think like a successful trader. My name is Fida and this is Fida Trade Academy. Quick note, this video uses an AI avatar and my own voice clone for production. All the trading knowledge and strategies you are about to learn are 100% from my own trading experience and research. Now let us get started. This is your complete trading course 2026. 1. What is trading? Let us start with the most basic question. What is trading? Trading is simply the act of buying and selling financial assets with the goal of making a profit. Those assets can be currencies like the US dollar and euro in the Forex market. They can be commodities like gold and oil. They can be stocks like Apple or Tesla, or they can be cryptocurrencies like Bitcoin and Ethereum. In every single market, the principle is the same. You buy something at a low price and you sell it at a higher price, or in some cases you sell first at a high price and buy back later at a lower price. This is called short selling. Now here is something most beginners do not understand. When you trade, you are not trading against the market itself. You are trading against other human beings. Every time you buy, someone else is selling. Every time you sell, someone else is buying. And the question you must always ask is, who is on the other side of my trade? And why are they doing the opposite of me? This thinking alone puts you ahead of 90% of beginner traders. 2. Types of markets. Now let us talk about the main markets you can trade in 2026. Market 1, Forex. Forex stands for foreign exchange. It is the largest financial market in the world with over $7.5 trillion traded every single day. In Forex, you trade currency pairs, for example, EURUSD. Euro versus US dollar, or GBPUSD, British pound versus US dollar, or USDJPY, US dollar versus Japanese yen. The Forex market is open 24 hours a day, 5 days a week, from Monday morning to Friday evening. Market 2. Gold. XAUUSD. Gold is one of the most popular trading instruments in the world, especially for traders in Pakistan. Gold is traded as XAUUSD, meaning the price of gold in US dollars. Gold moves because of economic uncertainty, inflation fears, geopolitical events like wars, and central bank buying and selling. Market 3. Cryptocurrency markets like Bitcoin and Ethereum are open 24 hours a day, 7 days a week. They are highly volatile, meaning prices move fast and big. This creates both opportunity and risk. Market 4. Stocks. Stock markets allow you to trade shares of companies like Apple, Amazon, and Tesla. Stock markets are open only during business hours of their country. For beginners, I personally recommend starting with Forex or gold. Lower capital required, more predictable movement, and more educational resources available. 3. How to read charts. Now we get into the real education. How to read a trading chart. A trading chart shows you the price history of any asset over time. The most important chart type you need to learn is the candlestick chart. Each candle on the chart tells you 4 things: the open price, where price started, the close price, where price ended, the high, the highest point reached, the low, the lowest point reached. A green candle means price went up. Price closed higher than it opened. Buyers were in control. A red candle means price went down. Price closed lower than it opened. Sellers were in control. Now, the thin lines above and below each candle are called wicks or shadows. A long wick above a candle means price went up but got rejected. Sellers pushed it back down. A long wick below a candle means price went down but got rejected. Buyers pushed it back up. These wicks are extremely important in smart money trading, and I will explain why in Module 5. Time frames. Every chart can be viewed in different time frames. The 1 minute chart shows each candle as 1 minute of price movement, used by scalpers. The 15-minute and 1 hour charts are used for day trading. The 4-hour and daily charts are used for swing trading. My personal recommendation for beginners: start with the 1 hour and 4-hour charts. They filter out the noise, they show you cleaner setups, and they give you more time to think before making a decision. 4. Support and resistance. Support and resistance are the foundation of all technical analysis. Let me explain these simply. Support is a price level where price tends to stop falling and bounce back up. Think of support like a floor. Price falls down, hits the floor, bounces up. Why does this happen? Because at that price level, there are many buyers waiting. When price reaches their level, they all buy at the same time. This buying pressure pushes price back up. Resistance is the opposite. It is a price level where price tends to stop rising and fall back down. Think of resistance like a ceiling. Price rises up, hits the ceiling, falls down. Why? Because at that level there are many sellers waiting. When price reaches their level, they all sell at the same time, and that selling pressure pushes price back down. How to find support and resistance? Look at your chart and find price levels where price reversed multiple times. The more times price reversed at a level, the stronger that level is. Round numbers are also key levels. Gold at $2,000, Bitcoin at $50,000, XAUUSD at 1.1000. Traders all over the world watch these levels, which makes them self-fulfilling. Breakouts. Sometimes price breaks through support or resistance. When support breaks, it often becomes new resistance. When resistance breaks, it often becomes new support. This is called a role reversal, and it is one of the most powerful concepts in all of trading. 5. Smart money concepts. Now we move into advanced territory. Smart money concepts, or SMC, is the trading methodology that has completely changed how I trade, and I believe it will change how you trade too. What is smart money? Smart money refers to institutional traders, banks, hedge funds, market makers, the people who move billions of dollars in the market every single day. These institutions do not trade like retail traders. They cannot just click buy or sell on a small account like we do. When an institution wants to buy $1 billion of gold, they cannot just buy it all at once. That would move the price against them. So they use strategies to accumulate their positions without being detected. And those strategies leave footprints on the chart that we can read. Concept 1. Order blocks. An order block is the last candle before a major price move. This is where institutions place their orders. When price comes back to that level, institutions often add more positions there. On a chart, you draw a box around the last candle before a big move. When price returns to that box, that is a high probability entry zone. Concept 2. Fair value gaps. When price moves very quickly in one direction, it leaves a gap in the chart. This is called a fair value gap. Price tends to come back and fill this gap before continuing in the original direction. Concept 3. Liquidity grabs. This is the concept most retail traders never understand, and it costs them everything. Smart money needs liquidity. They need sell orders to buy from and buy orders to sell into. Where are retail traders placing their stop losses? Below support levels, above resistance levels. So what does smart money do? They push price just below support. triggering all the stop losses of retail traders who are long. Those stop losses become sell orders. Smart money absorbs every single one of them. Then they push price back up. This is called a stop hunt or liquidity grab. And once you understand this concept, you will never be the victim of it again. Instead, you will wait for the liquidity grab and coupon and then enter in the direction of smart money. Concept 4. Market structure. Market structure tells you the overall direction of the market. In an uptrend, price makes higher highs and higher lows. In a downtrend, price makes lower highs and lower lows. When price breaks the structure, it signals a potential change in direction. This is called a break of structure or BOS. Always trade in the direction of the higher time frame market structure. If the daily chart is in an uptrend, look for buy setups on the lower time frames. 6. Scalping strategy. Now let us talk about scalping, one of the most searched trading styles in 2026. What is scalping? Scalping is a trading style where you take very short-term trades, sometimes just a few minutes. The goal is to capture small price movements multiple times per day. A scalper might make 10 to 20 trades per day, each targeting 5 to 20 pips of profit. My personal scalping strategy. Step 1. Identify the higher time frame trend. Look at the 1 hour or 4 hour chart. Determine if price is in an uptrend or downtrend. Step 2. Find a key level on the 15-minute chart. Look for a demand zone in an uptrend or a supply zone in a downtrend. Step 3. Drop to the 1 minute or 5-minute chart. Wait for price to reach your key level. Step 4. Look for a confirmation signal, a bullish candle closing above a previous high, or a bearish candle closing below a previous low. Step 5. Enter the trade. Stop loss below the wick of the entry candle. Target the next key level above. Step 6. Risk maximum 0.5% per scalp trade. Because you are taking more trades per day, reduce your risk per trade accordingly. Scalping rules. I personally follow: never scalp against the higher time frame trend. Never scalp during major news events. Set a maximum daily loss limit. If I lose 2% in one day, I stop trading. Quality over quantity. Wait for the best setup. Never chase a trade that has already moved. 7. Risk management. This is the most important module in this course. I want you to understand something. You can have the best trading strategy in the world, but without proper risk management, you will lose everything. I have seen this happen to hundreds of traders. The 1% rule. Never risk more than 1% of your account on any single trade. If you have a $1,000 account, you risk maximum $10 per trade. If you have a $500 account, you risk maximum $5 per trade. This sounds very small, I know, but let me show you the mathematics. With 1% risk, if you lose 10 trades in a row, you still have 90% of your account. You survive, you learn, you recover. With 10% risk, if you lose 10 trades in a row, your account is completely gone. No recovery. Game over. The risk to reward ratio. Every trade you take must have a minimum 1 to 2 risk to reward ratio. This means for every $1 you risk, you must be targeting at least $2 profit. With a 1 to 2 risk reward ratio, you only need to win 40% of your trades to be profitable overall. Think about that. You can lose more trades than you win and still make money. This is the power of risk reward. Stop losses. Non-negotiable. Every single trade must have a stop loss. No exceptions ever. A stop loss is your insurance policy. It limits your maximum loss on any trade. Never move your stop loss further away to avoid being stopped out. That is one of the most dangerous habits in trading. Position sizing. Use this formula for every trade. Account balance multiplied by 1% divided by your stop loss in pips equals your position size in lots. Example, $1,000 account, 1% risk equals $10. Stop loss equals 20 pips. 10 divided by 20 equals $0.5 per pip. This determines your lot size. Learn this formula. Use it every trade. It will save your account. 8. Trading psychology. Now we come to the module that most trading courses skip entirely, but in my personal experience, trading psychology is responsible for 80% of trading failures. Not bad strategy, not bad markets, psychology. The two enemies of every trader. Enemy 1. Fear. Fear makes you exit trades too early. Fear makes you not take valid setups. Fear makes you reduce your position size when you should not. And fear makes you panic sell at the bottom. Enemy 2, greed. Greed makes you hold winning trades too long until they reverse against you. Greed makes you risk too much on one trade. Greed makes you overtrade. And greed makes you buy at the top. The market is specifically designed to trigger your fear and greed at exactly the wrong moments. How I personally manage psychology. Rule 1. I never trade when emotional, angry, tired, stressed, excited. All of these states lead to bad decisions. Rule 2. I follow my trading plan exactly. No improvisation, no gut feelings. If the setup is not there, I do not trade. Rule 3. I accept losses as a business expense. Losing trades are part of trading. A doctor loses patients, a lawyer loses cases, a trader loses trades. What matters is the overall result. Rule 4. I review my trades every week. I keep a trading journal. I write down every trade I take, entry, exit, reason, result. This helps me improve every single week. Rule 5. I never revenge trade. After a losing trade, I take a break, minimum 30 minutes, clear my head, then come back. The mindset of profitable traders. Profitable traders think in probabilities. They know that any single trade can lose, but over 100 trades, their edge plays out. They are not attached to any single trade. They do not need any specific trade to win. They trust the process, and they let the numbers work for them over time. 9. Your trading plan. Before you place a single trade, you need a written trading plan. A trading plan answers these questions. What markets will I trade? Gold, Forex, crypto. Pick your focus. What time frames will I use? Higher time frame for analysis, lower time frame for entry. What is my strategy? Describe exactly what setups you will trade. What is my risk per trade? Write it down. 1% maximum. What is my minimum risk to reward ratio? Write it down. 1 to 2 minimum. What time of day will I trade? London session, New York session. Do not trade all day. What are my daily loss limits? If I lose 2% today, I stop trading. What are my rules for journaling? Write down every trade you take. Your trading plan is your business plan. Treat trading like a business, not like gambling, not like entertainment, a serious professional business. Conclusion: you have just completed the Fida Trade Academy Complete Trading Course 2026. Let me summarize what you have learned today. Module 1. What trading is and how markets work. Module 2. The main markets you can trade. Module 3. How to read candlestick charts. Module 4. Support and resistance levels. Module 5. Smart money, concepts and liquidity. Module 6. Scalping strategy step by step. Module 7. Risk management rules that save accounts. Module 8. Trading psychology and mindset. Module 9. How to build your trading plan. This is a complete foundation. But remember, knowledge alone is not enough. You must practice every single day. Open a demo account first. Apply everything you learned here. Only move to a live account when you are consistently profitable on demo. My personal advice to you: master one concept at a time. Do not try to learn everything at once. Pick one module from today. Go deep on it for 1 week, then move to the next. Trading is a marathon, not a sprint. The traders who succeed are not the ones who learn the fastest. They are the ones who stay consistent the longest. If you found value in this course, please subscribe to Fida Trade Academy. I post new analysis and education every week. And tell me in the comments, which module was most valuable for you today? I read every single comment and I reply to as many as I can. Share this video with one trader friend who needs to see it. This free course could change their trading forever. Thank you for watching. I will see you in the next video. This content is for educational purposes only, not financial advice. Always manage your own risk.